I've worked for some of the biggest banks in the world, including for Lehman Brothers, which, as we know, disappeared in the financial crisis of 2008. I understand that you're all worried about Brexit, but there's a larger financial crisis looming around the corner. Because you may have thought that the global banking system has been reformed, but it hasn't been. And if we don't tackle it, we're going to sink into an epic credit crisis. And it's one that's going to hurt the poorest people even harder than last time. And after the financial crisis, governments allowed central bankers to effectively print money, which they did, to the tune of $21 trillion worth of subsidies. Great. Socialism for the banks. And instead of bridging the economic gap, that money went into their bubble. And banks used it for speculation and manipulation. Lending to ordinary firms and households has barely grown. Neither have wages or prosperity for most of the world's population. Just think about it. If the massive plans for infrastructure, spending, and development had actually transpired into reality, the fate of companies like British Steel could have been dramatically different. And so the combination of quantitative easing and low interest rates has led to growing inequality. Public debt and private debt have increased massively to new records since the financial crisis. There is a huge imbalance, and that bubble could pop at any time. Of course, banks will use difficult situations like Brexit to argue for less regulation and more wiggle room, no matter what politicians settle on. But make no mistake, they need to be anchored with strong global reforms and more regulations, because otherwise, we are all in for some extremely deep water.
And we welcome Nomi Prins, author of Collusion with Central Bankers, How They Rigged the World. Welcome to the program.
Thank you.
Now, you seem to think that we're sort of sailing towards a crash. But in a sense, we're always doing that. There's always a downturn round the corner. The question is when and why. What's the answer?
The why, let me take first, because the why is because the bubble that we have now is bigger than it was before the last crash. And that's because we've had so much cheap money. We've had these central bank subsidies across the world, and they've inflated what banks have been able to do, the lending that has gone out from a public and private perspective, and again, increase this inequality. And so when we fall from this higher level of debt than we had before. So the crash is bigger.
But crashes come when there's been a boom. The crash of 1929 was after the Wall Street boom of the 1920s. The crash of 2008 came after the boom of the noughties in 24, 5, 6, 7. There is no economic boom at the moment. Asset prices haven't soared. Indeed, they flattened out. No major economy is booming. Where does the crash come from?
The irony is that in the 1929 crash, the situation was that, yes, stock markets were inflated, but underneath the inflation of stocks and stock prices was a lot of debt that was sort of sinking at the bottom.
But there was a boom. There is no boom now. Crashes follow booms. Boom and bust, which memorably in this country Gordon Brown told us he would abolish. But as opposed to a slowdown or a recession, a crash, which is much more serious as it was in 2008, that follows a boom. There is no boom in the global economy.
But crashes, particularly when they relate to credit, also follow an overextension of credit or an over-leverage of credit. And so the boom in our economy now is, yes, it's not the real economy. It's the debt economy. It's the debt bubble. And so the crash happens. It's like a balloon. You know, you're inflating or inflating. You're inflating debt. You're inflating to an extent stock, but mostly debt. Because you have such cheap money as sort of the helium to that balloon, it gets bigger and bigger and bigger. It pops. And that's your crash.
Michael.
Well, clearly, I don't know whether Nomi is right or not, but listening to that discussion between you, I don't think it follows that you can only have a crash after a boom. Rather, I would say the opposite, that what has been so disappointing is that having had the last crash, we've remained, bubbling along on the bottom for a very long period. But what Nomi is saying about the quantities of quantitative easing, I think she said $21 trillion, I mean, this stuff has been injected into the economy somewhere. So even if it hasn't led to a boom, which is, a pretty bad thing for most of us because it means that real wages haven't gone up for most people. Even if it hasn't led to a boom, it's out there somewhere creating an inflationary effect which can be deflated at some point. So
where's the inflationary effect?
When I say
Inflation in this country is 2%. In America, it's under 2%. In the Eurozone, core inflation is 1%. It would be perfectly easy to answer that the bigger risk we face is deflation, not inflation, not boom.
When I said inflationary, I used the wrong word. I didn't mean to say that it has led to a chronic rising of prices. What I meant is that money is out there, an excess of money, which at some point is going to have to be corrected.
The money is redeemed under QE when the bonds mature.
Well,
when
but
the
that's
bonds
forever.
mature, the money goes back, and then the central banks take that money and they crunch it back into the system and it disappears. Alan,
Is an essential argument that nothing much has changed, that bankers, and I remember the governor of the Bank of England telling me and Ed Miliband, that when we said, how do bankers feel about what's happening now? He said, well, it depends on how old they are. The ones over 50 think this is all terrible and there's something really seriously gone wrong with banking. The young ones think, what's the issue here? So you still got a problem where companies, last time I was an MP, were struggling to get any investment if there were small businesses. You've still got the issue, you've had the issue with banks like the Co-op Bank, which was supposed to be a cooperative, which happened after the bust. For all the various reforms that were put in place to make sure this will never happen again, I take your point, Andrew, about boom and bust, but what we were going to try and make sure is that we never went back to too big to fail. I don't think we have. That we were going to put investment in our infrastructure, I don't think it's happened. Right. And I think that what we're doing is still rolling along the bottom.
Well, and Michael, what you said actually about inflation and how we're talking about old inflation as in prices, the reality is we have had inflation. It's been in the stock market, it's been in the bond markets, it's been in the quality of debt. So lower quality debt, companies that borrow more than they should because they're not making enough money to really to sustain that. They're borrowing more and more. That's the kind of debt that's been increased because rates have been so low. And so there has been inflation, but the inflation has been in financial assets and in the prices that people actually pay for things, but not necessarily in the economy itself because infrastructure hasn't been developed, because there hasn't been as much sort of foundational economic growth, which is why we didn't have an economic boom this time, which is why a crash at the end of the inflation of financial assets will be so much more painful.
Could I just say that whether Nomi is right or wrong about the future, the politics of this, I think, are really serious and dire, because I think a lot of what's gone on in the last 10 years in politics globally is a disgust on the part of the public about the capitalist system, actually, and about people who have made good, and about people who crash the economy, like crashing a car on the motorway, and have paid no price for it. They haven't seen anyone in handcuffs.
Still doing well. That's
they're
right.
still doing well.
But that's fine. But what's but? And there's no question that QE, as Nomi says, has increased wealth inequalities because money's gone into assets, and the rich had the assets in the first place, whereas wages have been stagnating. I get that. But in the aftermath of the crash, what was the alternative to QE?
I think...
Take that as none.
No. I think our Chancellor of the Exchequer at the time, who was Alistair Darling, took the right decision. That doesn't mean that a right decision doesn't have very unpleasant consequences down the road.
It wasn't Darling
and by the way,
decision on QE.
And by the way, it wasn't his decision to sustain it for 6 or 7 years, which is what has happened.
He did. You see, you say that the
Really.
banks haven't changed.
Right.
But in this country, we have separated retail banking from investment banking, casino banking, the way it used to be in America under the Glass-Steagall Act. We have now massively increased the capital on banks' balance sheets, and they're stress tested to hell. In the latest Bank of England one, they assumed house prices fell by 30%, and the bank still passed the stress test. And you say that bank lending has barely grown. UK bank mortgages approvals are up 50%. Lending to business is rising by over 4% a year.
But in terms of the types of businesses and the individual mortgages that the UK banks have been lending to, it isn't the same proportionally as it was even into the crisis. And it's true that the Bank of England did do quantitative easing, and it did it less than the Fed on a proportional basis to its banking system.
Not much.
But there's not much, because there's still about $1 trillion worth of QE underlying that system. If the system was perfect, you wouldn't need that.
No, but bank lending has not been massively growing since the crash. But that's a good thing, because one of the things that led to the crash was that bank lending went out of hand. And they were lending, you've seen it in The Big Short, they were lending to lap dancers in Florida. And so I've looked at the graphs, and bank lending went through the roof. Then we had a crash. You look at bank lending now, it's much more steady and solid, and that's true in America as well. And that's why I don't see where, in the short term, the crash comes. Of course, a crash will come one day, I understand that. But I don't see where one comes this year or next year.
Again, because right now, public debt and corporate debt to any GDP is about 2.2 times throughout the entire world, of which the UK is a number 5 economy,
Sure.
the US is 5, and so forth. So everyone is basically a part of this sort of debt bubble. And it's true that lending has increased, but it's increased in the corporate and public world more than it has to small businesses on the ground. So that's where the inequality comes in. A small business can't necessarily get the loan at the same percentage of the very cheap rate.
But you're a financial correspondent. You know
will.
that small businesses are the single biggest lending risk that any bank faces.
But they're also the cornerstone of an economy. And they're not
But they're a risk.
necessarily the biggest risk, because small businesses don't necessarily leverage as much. So it's a question of, can a small business go in and out of business? Yes, it can. But it's not going to leverage that risk by 10 or 15 or 20 times. And that's the problem that we're facing.
When does the downturn come? And is it a slowdown, a recession, or a crash?
I'm not too sure that we are heading for a downturn. I agree with you, Mark. I can't see any signs of that happening yet. Although inflation, I think, is now 2.2. So it's
2.1.
Is it 2.1? So it's gone over to 2%.
0.1
Yeah, okay.
for a month.
Okay. But
And wages are rising by 3.4 now.
Well, I know more about politics than I do about economics, and
You were Chief Secretary to the Treasury.
point made.
See what I have to put up with? All right.
So
Answer to the question.
Well, my political point would be that I think whatever happens, we're not going to see an era of great prosperity. Whatever happens, I think people are going to continue to be extremely browned off. If Nomi's right, it's going to be worse than that. One way or another, we're going to have a dissatisfied electorate in many countries for a long time.
That I wouldn't argue with, as we will find out in the European elections. I shouldn't have mentioned that, sorry. Sorry to Lithuania there. Oh, no, they're all right. I've told them what to do. Just before we go, Nomi, final thing to you. When, if there is going to be a crash, do you have any idea when?
I don't. I do know that the central banks will continue to inflate that bubble as long as they can, and the negatives, the debt, and people's dissatisfaction and inequality will grow, and at some point when that reaches a breaking point, it could be in a year, it could be in 2 years, it could be in 3 years, but it's around the corner in that respect.
All right. Okay. Thank you very much.
Thank you.